Welcome to Business Growth Academy. I'm your host, Jen Richardson, and today I want to talk about something that a lot of business owners are probably treating like just another compliance change. But I actually think this one is a lot bigger than that because Payday Super is not just an admin update. It's going to show up as a real cash flow issue for a lot of businesses. And it's going to be a systems issue. And for some businesses, it's going to be a really big wake-up call. Now, if we haven't met before, I'm Jen Richardson. I'm the founder of 123 Financial Group and Business Growth Academy. And in both those, we work with small business owners, especially tradies and service-based businesses who are working hard, staying busy, bringing in money, but I know are still feeling the pressure around cash flow, profit, there's tax, and just understanding what the numbers are really telling them in their business. And this is why this podcast matters, because on the 1st of July 2026, employers need to pay super at the same time as they pay wages. Instead of at the moment, what you're doing is paying your superannuation quarterly. So from the 1st of July, on the day that you pay your employees and also your deemed employees, so they're contractors that are deemed to be workers of yours, so you need to pay their super on the same day. So it doesn't have to be in their super fund on the day that you pay, but it must be in the bank account of that in the super fund account of that employee within 7 days. So given that all businesses are going to be trying to lodge superannuation and wages quite regularly, we need to allow the super funds plenty of time to process the deposit that comes in and transfer it to the bank account of your employees. So we're really advising everybody, yes, do your pay runs, you lodge your single touch payroll reports with the tax office, you transfer the ABA file to your bank account, and then you transfer your superannuation straight away. So for some business owners, this is going to feel like a real shift, because what we've found is that as things have got tight with businesses, they're leaving super to the last minute, because we've been able as business owners to hold on to our employees' super for almost 3 months, and that will come to an end in July. So the issue that we see is that all of a sudden, this has always been there. It's just going to be a cash flow issue because people aren't prepared. So with 2-ish months left till this comes in, there needs to be a lot of shifting for employees. And I think the thing that a lot of people will miss is that this isn't just about your payroll employees. As I said, if you've got subcontractors who are deemed workers for superannuation purposes and they're being paid mainly for their labour, they may need super paid too. So the ATO is very clear that some independent contractors paid mainly for their labour are treated as employee for super guarantee purposes. And because those payments often sit outside the payroll system, I can see already that this is going to be one of the biggest traps that we find. So if your accountant says to you 3 or 4 months later you should have paid super for these contractors, that they're deemed employees, you will have to lodge SG forms with the tax office because you didn't meet that deadline. So this is where I think it's going to get very expensive for people, because once super is missed, it's not just the super that you need to catch up on. You need to also pay the shortfall. So you'll pay the 10% interest that the ATO charge you, as well as the administration fee, which is currently $20 per employee per pay run that you got wrong. So if you've got 3 months of a contractor that you haven't paid and you pay weekly, then you will have 13 times 20 as an administration fee, plus then the interest that you're going to get hit with. So today I want to talk about what this really means, and where I think businesses will get caught out, and what you need to fix now before this becomes really stressful and an expensive operation. Because not only do you pay that administration fee of $20 per employee per pay run that was missed, and the interest, of course, but the superannuation suddenly becomes non-tax deductible. So you're paying an expense out of your business that you're not going to get a tax deduction for. So stay with me, because the biggest issue here is not actually the super, it's what this change reveals about how your business is handling money. So Payday Super sounds like a technical change, but it really is about the cash discipline. So you've got to make sure that on each pay run, or every time you pay a contractor, that not only do you have the net wages and the net payment to your subby ready, you've also got to have the superannuation. So the tax that you withhold from the wages still doesn't need to be paid until whatever your cycle is with lodging your IASs or your BASs. So that can be monthly for some people, or it could be quarterly for others. So for a lot of businesses, they've had a little bit of breathing room under the quarterly system, because you didn't have to find your superannuation that was on, say, the July wages until October. So, you did buy yourself a little breathing room. And so some businesses have been using that for their cash flow shortages. And what that has been showing is that because we don't have our true cost of having an employee there, that we've got a real cash flow issue. But because it was held off until, 3 months, 2 months, or even a month on when you had to pay that super, the cash flow issue was masked because we weren't seeing that it was going to be there. So that breathing room is going to disappear from the 1st of July. And the issue that I also see is that if you've been paying your superannuation quarterly, come July, you're going to have to do Payday Super. So every day that your pay runs go through, you'll have to pay the super, but then you're also going to have to pay your quarterly super by the 28th of July. So that's the super that was due for your employees in April, May, and June 26 will also get paid in July. So, the deflection and deferral of the current super isn't going to be happening. So by the 28th of July, you'll have the 3 months plus pretty much July's will have been paid as well. So you're actually going to pay 4 months of super in 1 month. So that is going to be a real cash flow issue for a lot of businesses. So businesses that cope best won't necessarily be the busiest ones. They'll be the ones that have systems in place, they're clear on their numbers. And so what I want you to do is, this is one of those changes where people think that they've got a compliance issue, but what we're going to actually see is that they've got a business structure issue. So between now and the 1st of July, what I would really like you to start to do is to catch up and make sure that you've paid up to date the superannuation for the current period. And of course, that's always a good option anyway, because one of our tax planning issues that we always say to our clients is, at the end of June, you should have paid your June super, like the one that was due in July, because what that does is then makes it tax deductible. You're going to have to pay it 28 days later anyway, at the absolute latest. So why not pay it in June and get the tax deduction in June? Now, the tax rates are changing very slightly on that lowest tax bracket from the 1st of July as well. So, normally we would say defer income as best you can. So it's on the lowest tax bracket, but of course every single taxpayer gets to use that lowest tax bracket anyway. And so there's a little bit of tax planning. Push your income out as far as you can. If you can, we don't want to impact our cash flow, of course, but make sure that if you can get that superannuation paid for your June quarter before the end of June. That means when Payday Super comes in on the 1st of July, all you're doing is paying the current superannuation. So you need to get out of the old rhythm that a lot of businesses had, where they relied on holding that superannuation and not paying it for some time. And if money, it's important to remember, of course, that money for the superannuation has to hit your employee's superannuation account 7 days after the pay cycle. So, we've got to rely on money coming out of your bank account, going to the superannuation fund's holding account, and then them transferring it to the employee's own superannuation account. So it really is, even though you've got 7 days, I think if you don't do it the same day as payroll, you can get caught out and you'll have to then do all the super guarantee forms and pay the penalties. So it is important just to remember that your superannuation now falls in line with wages and not quarterly. And so I want you to really be cash flow conscious, that every pay cycle, I mean, so many businesses I talk to will say to me, I need X amount of dollars for my pay day, which is always the net wages. Now you're going to have to be able to come up with what you need for the net wages as well as what's got to go in superannuation. So start looking at what your average superannuation is per pay cycle is a good start to getting ahead of this so that you can do a bit of pre-planning. The other big thing that's coming out is that the tax office's small business super clearing account is closing on the 30th of June. So if you've been paying your employees super through the clearinghouse, you need to now find another way. We always recommend here that our clients use Xero software, and of course they've now opened up on the very base level of their subscriptions that you do have superannuation. But please don't leave this until you do your first pay run in July, because you've got to get the superannuation set up inside Xero. So you've got to transfer all your employees' super funds, their member number, their USI, which is their unique super identifying number, and they've all got to get set up. You've also then got to get it all to work. And I just don't want you leaving that to payday and then finding out you haven't got something, and so you've got to try to do it. So, and of course, Payday Super coming in on the 1st of July, it lands when small businesses, of course, are already squeezed for time and, of course, their margins. And as we know, with inflation going up, the RBA interest rates are getting put up, cost of living is going up. You know, we know what the fuel cost is because of the war. It's adding to all the other costs that so many small businesses are already feeling really tight and squeezed on. So I want you to think ahead. Remember, I'm cash flow, cash flow, cash flow with everything. And so I need you to start to think about what this impact is going to be on your cash flow come 1st of July, but also time-wise, because you need to also, whoever does the pay runs with your business, you need to make sure that they understand that they need to also do the superannuation straight after they do the pay runs. And of course, you know, we might think that everybody understands this, but you as a business owner, it's your responsibility to make sure that your staff know this. So if you've got somebody else doing your pay runs for you, whether that be your bookkeeper, internal staff, your partner, yourself or your accountant, please make sure that you know that they've got to do the pay run and the superannuation run. So I'm hoping that that gives you a little bit of understanding of the logistics behind this. And if this is not landing in a nice calm environment where everyone's got spare cash around, start to do some projections. So if you are already stretched financially, it's really important that you start to look at it. And you know what? One of the things that I always say is this isn't a niche problem either, because Australia has just under 995,000 employing businesses. So this is 900 and almost 95,000 businesses in Australia that's going to see the biggest impact for their staff and employing that they've had for a number of years. So it's a huge issue for a number of businesses. So it's not just you, it's lots of businesses, but of course the only business that you need to worry about is your own. So key takeaways here is we need to look at your cash flow to make sure that you've got enough money set aside for every payday. You also need to look at how you're paying that super if you've been using the tax office's super clearing account, because as I said, that will close. So hopefully you've got that sorted with your software and you've got all the information in there. Don't leave it to the last minute. So If you're setting up your superannuation for the first time because you've been using the clearinghouse, please make sure that you have set up all your employees' super funds in there so that it is all done and ready to go. So, as I said at the start of this is not a super problem. It's a cash flow timing problem. And if you've gotten used to the wages being paid immediately and super's holding off till later, then that has been giving you a false picture of what your payroll actually costs. So here is your homework. I want you to go through your payroll, work out roughly what your average payroll is, find out roughly what your average superannuation is on that, each of those pay runs, and just have that set aside to make sure that if you pay your staff weekly, that you've actually got everything set up ready to go so that you can pay that. But I also need you to have a chat with your accountant and see if you've got any contractors that are going to get caught under this. Because Xero in their software, when this all started to come out, they've actually put in where you can do your contractors through there, whereas in the past you haven't been able to do that. But you can now do your superannuation for your your contractors, but you do have to do that manually because it doesn't run through the payroll cycle. So keep in mind that deemed employees under contractors are if they're mainly for labour. So I always say when I talk to my clients, when you're thinking about your contractors, if it walks like a duck and quacks like a duck, it probably is a duck. So if somebody's looking from the outside in, can they tell that that person doesn't work for you, or is it obvious that they're effectively your employee? Do they wear your own clothes? Do they take the risk? Is there a risk that they've got to rectify things if they have to, if something goes wrong? If they're paid mainly for labour and they don't provide materials or tools of significance, then they are probably a deemed employee. Now, the tax office does have a tool that you can check on their site. So if you just go onto the ATO site, so ato.gov.au, you will just search in the search engine about employee versus contractor, and it will come up with the tool that you can walk through to see whether your contractors are possibly a deemed employee. Have a chat to your accountant if you're really not sure. So it is important that because the contractor set outside the payroll system that it could easily be missed, but it is really going to be an expensive issue if you do miss those. So a lot of business owners think that they've handled the Payday Super because they've updated their payroll, they have looked at where their payroll is up to, and they think that there's no real issue here. But that's one of the key issues that I think people are going to get caught in. And we've put some systems and procedures in place here for our clients at 123 Financial Group, where we're checking on every pay run to make sure that our clients' contractors have been picked up. And if you've got a bookkeeper or if you've got somebody doing your payroll for you, make sure that they're doing that. So every single pay run that goes through, just do a run on your contractors between the last pay run and this pay run to find out who you have paid, how much you've paid them. And it's a good idea to do the check to see whether they're an independent contractor or whether they are a deemed employee, and having two different codes in your Xero data file so that you've just got to go through your deemed employee contractors. So every time you bring on a new contractor or every time your circumstances change with a contractor, make that decision and get your bookkeeper or whoever does your bookkeeping to make sure that they code it to that either independent contractor or deemed employee contractor, so that that will limit the amount of times that you could miss this. Now, what else do you need to talk about when it comes to Payday Super? I want you to be really careful that when you're bring on a new employee, that you collect their superannuation before they start work. So one of the things that we've seen with our clients is they'll get a new employee, the employee doesn't give them the superannuation fund straight away. And of course, it's not an issue because if you're paying somebody, you always have that quarter to catch up. And that is not going to be the case now. So when the quarter ended, you had 28 days to get that money into the bank account. You're now down to 7 days after you've paid them. So a new employee, please make sure that before they start work that you have their superannuation details. If they don't, the tax office will have potentially what we call a stapled superannuation account for those employees. So you can go in through the business portal and do a search to find out the stapled superannuation account of your new employee. That is assuming they're not new and out of school, because not everybody has a stapled superannuation fund, but it is important as an employer that you either use the superannuation choice that your employee gave you, and that's, we get all of our clients to give their new employee the super choice form, or you use the stapled one, because if you don't put it to one of those, there are some penalties, because the tax office is trying to get people to not have hundreds of superannuation funds. Because one of the things that we found in the past is it used to be every time you changed employers, you had to go to the fund that they were using. And so a lot of employees had 2, 3, 4, 5, 6 superannuation funds. And that meant that superannuation was getting lost, because you would move address, you'd change your postal address, you didn't have tax file numbers back then on them. And so there is close to $20 billion in lost superannuation in Australia at the moment. And so the government's trying to get it that we don't have that lost superannuation, because when it is lost, it's not there for the person when they retire. And of course, from the government's point of view, if everybody is looking after themselves in retirement, you're not being a burden to the public coffers, I guess. You're not on the aged pension, or you're not getting a full aged pension. And this will become less burden for the government as we get older, because, superannuation, compulsory superannuation anyway, didn't come in until 1992. And when it did come in, it was 3%. So people that are retiring now and in probably the next 10, 20 years will still have some use of the government aged pension. As we go on, and any new people into the workforce now are getting superannuation at 12%. So they're going to be a lot closer to being self-sufficient in retirement. There will still be people that won't be self-sufficient, low income earners. It'll be people that have had time out of the workforce, people that haven't worked full time, people that haven't worked, or people that have been self-employed and not prioritise putting superannuation away for themselves. So this is certainly an area that the tax office is going to be looking at. So be very careful, as I said, when you get a new employee, that you make sure that they complete that super choice. You go in and find their stapled super if you don't get that form from them, or if not, you get them to find a superannuation fund. So if you think you are sorted when it comes to Payday Super, I want you to really double check all of these things to make sure you are genuinely sorted, because this is the kind of thing that is going to bite you in the butt if you don't get it sorted. So as I said, this is where I'm going to see some owners get caught out, some business owners, get caught out, not because they're trying to avoid anything. And 99.9% of employers are doing the right thing by their employee, but there is extra steps that we need to do now to make sure that we are. And this process is to match the reality of what you think you're doing with what you're doing here. So the rule just doesn't apply to your payroll system. It follows whether SG form applies, and some of those contractors are going to get businesses stuck out. So if superannuation, as I said earlier in the podcast, is paid late, not only do you have the SG reporting requirements, so that's where you have to fill in a form with the tax office to tell them which employee, their member number, and how much shortfall you didn't do. So that's whether you didn't pay enough or didn't pay anything at all, or it wasn't received by their super fund by the due date. So not only do you have to pay that super, you'll also then pay the interest. As I said, that's 10%. And that's there to compensate the employee, because the money wasn't in their superannuation fund earning money for them. And so that's why you have to pay the 10% interest charges. And as I said, there's also the administration charge, which is $20 per employee per cycle that it is being missed. But the most expensive thing that comes of this is that the superannuation is not tax deductible as well. So make sure you've got your systems and procedures in place so that these things don't come back to bite you later. The other thing that we're flagging with our clients is when any of our clients have missed their superannuation, it's generally us that's picked it up. And so we have to do the SG forms for the client. Now, if you pay your employees weekly and you don't do this, that's 52 SG forms that your accountant or your bookkeeper or your staff are going to have to fill in. So that is really time consuming as well. So not only do you have the interest, the administration charge, the non-tax deductible of the superannuation, you're now either going to pay your bookkeeper, your accountant, or your staff, or whoever does your payroll, to do all these forms with the tax office, which means you've got the inefficiency there. And that's the hidden cost that we don't ever see. So I want you to really look at all of this now. If you're not quite sure what needs to be done, reach out to me below and I will give you a hand. So this is where business, I want you to go from saying I've missed something to suddenly realizing it's cost more than it should have. So putting in the time and effort now will help you relieve the pressure later, and of course that comes with stress. So I think that's it for this podcast. If you've got any questions, reach out to me. And of course, if this has hit home or you're not quite sure about any of the things that we've been talking about here, I want you just to reach out to me either where you're listening or watching to this. Subscribe to my podcast or my YouTube channel where you might be watching this, so that you don't miss out when we drop these podcasts. So they're going to be a weekly podcast. As I said in my intro, I want this to be about helping you and making life better for you as a business owner. So reach out if you need any help. Let me know if there's any topics you want me to cover or anything that you've not been sure about with running your business. So I guess the thing that I find people saying all the time is that that's okay, I'll just do more work and I'll get more income and this will be okay. Don't throw money away. Don't give the tax office money that they don't need to have. And when you make your superannuation not tax deductible, you are throwing money out the window. So work out your true cost of your pay run each time and make sure you include the super in that. Make sure you look at your employees, your contractors, and everybody that you need to pay super on. Contractors, as I said, is where I see the biggest issue happening. Make sure you've got your superannuation set up inside your data file and make sure you've got enough cash there. And, you know, one of the things that, even though I haven't dealt with it in this podcast, one of the things I always say to every business owner is whatever the tax that's being withheld from your wages, it's not yours. You are holding it and it needs to go to the tax office at some point. So move it out of your business bank account into a separate bank account so that when your BAS is due, you have that money sitting there ready to go. So if business is already feeling hard for you at the moment, what I want you to know is that you have time to fix this and get everything set up so that when the 1st of July comes, you are ready to rock and roll when it comes. So make sure you've got enough cash. Cash flow, as I always say with anybody who knows what I talk about, is the key to everything when it comes to your business. Now, here at 123 Financial Group and in Business Growth Academy, we talk about a profit engine. And what a profit engine, we talk about the 3 pillars, which is clarity, control, and growth. And so with this one, it's actually covering off all 3 of those pillars, because the clarity is there to find out what you actually owe. The control is setting your systems and procedures in place, and the growth can happen because you have the cash flow there because of it. So this is exactly what we talk about inside Business Growth Academy and the 123 Financial Group, because it is already an issue with anybody that is a little bit shaky underneath. This is going to be a real pressure on your cash flow. So if you've been listening to this and thinking this is going to be an issue for my business, that's actually a good thing to realize now, because it's actually going to give you time to get things in place. So just remember, 123 Financial Group, we work with small business owners only, and especially the tradies and service-based businesses. And we help you understand your numbers, improve your cash flow, and build proper financial systems so that you're not constantly under pressure. And through my Business Growth Academy, we support business owners who want more guidance, more confidence, and more control over how you run your business. So if you've been listening to this and thinking payroll already feels tight, cash flow feels a little bit patchy, or I'm not even sure whether my subcontractors have been looked at properly for super, then reach out and have a conversation with us. Because the sooner you get clarity, the easier this is going to be to fix. And it's no point burying your head and hoping that it will solve itself, because it will not. So if you know, obviously, another business owner that needs to hear this, or you're hearing on job sites or through your business network that your friends, colleagues, or other tradies don't know what they're in for on the 1st of July, send them over to my podcast station, let them listen to this. So share and like my podcast, and I'll see you next week.